Diaz Castro. So sustainable finance is this idea that finance can be used for good and can be used to build a better world for people and for the planet. It's this conception that we can implement certain measures and activities within the decision-making of financial institutions such as banks, investors, or insurers that are going to lead them to make better decisions and then drive capital towards activities that are supporting sustainable development. Because to solve global issues, we also need to bring together different stakeholders. We cannot depend only on public funds. We have seen that depending on the political decisions that different governments take, those funds change in terms of the levels that they are being used to address those sustainability issues. Private finance sector is a very important actor, but not only do they have the potential to really address these issues, they also have a huge business opportunity waiting for them. So there are different ones, and I think we need to look at it from the risk side and the opportunity side. On the risk side, financial institutions need to understand that if they don't address those issues right now, then their future is going to be compromised. The future of financial institutions such as banks, insurers, or investors is going to be impacted by risks such as climate change. That's been seen today, and we are already seeing the impacts that climate change is having on those financial institutions, whether it is by devaluing the assets that they have under their portfolios, by making regions uninsurable in the case of insurance companies, or simply by affecting, for example, credit lines or creating more defaults in the payments for banks. So now we are seeing the impacts, and that's just going to get worse over time as these risks start to materialize as financial risks. All right, so there are different ways of looking at it. I'm going to talk about the product side and developing new innovative products for sustainable finance. So one very clear example is the case of insuring coral reefs, for example, or insuring nature in general, which is a very new area. I would say around 2-3 years, this is a new product area that different insurance companies around the world are identifying. In the specific case of insuring coral reefs, this was a project that was created in the peninsula of Yucatan in Mexico. It was the first of its type. And what happened was that they identified that the tourism, the economy in a region depended on the existence and the preservation of coral reefs. And so the insurance company, which is a Swiss reinsurance company, actually decided to collaborate with local organizations in order to create an insurance product for coral reefs. And that includes activities of preservation and restoration after an event happens. It actually already delivered results, and there was a payout a couple of years ago after a hurricane hit the coast. And you can already see how it helps communities bounce back after those kind of events and to build resilience not only in the community but in the entire economy of the region. So we want to continue supporting financial institutions, creating institutional change, but also systemic change. The more organizations that we can support, that we can work with, so that they embed these sustainability issues across all levels of their decision-making, creating more resilient businesses, the more we are creating a systemic change. And that means changing the economy as a whole and the financial system, creating a financial system that works for people and for the planet.